Okay traders, here's a very quick video. I'm going to put some step-by-step processes together here for this pound yen just to explain the price action. So I've got it on a 15-minute time frame, and this morning we were charting this move up, and we were talking about this 76.4 key level to apply my 764 strategy, which is a high probability strategy. And of course you see the price has reacted there beautifully. If we flick up to an hour chart, I always look at hour charts, 4 hour charts, daily charts for a close of the candle ideally, which would be the ideal scenario. And you can see here in this case it was the ideal scenario. It closed at 11 AM London time, and literally the 12 PM lunchtime candle did exactly what we wanted to see happen. So entry was really simple by drilling down to like a 15-minute chart, or even a 5-minute chart, or a 1-minute chart, whatever you want to look for in terms of, whichever smaller time frame. I tend to use all three of them: 1 minute, 5 minute, 3 and 15 minute, so just to help me find the perfect entry. So that would be my first step. Once I know that price has come up to where I want it to come up to, so if I was long, I would buy up to the 764. Even if you got in here on the pullback and bought it back up, that would be a perfect, nice, 30-40 pip trade with no drama at all. Just taking it to what we call the fib extensions for a divergence strategy, which is also here and highlighted. So just wanted to show you that, and that's why I've stripped everything back and just left this current price action. So you have here a fib extension to the 127, so 150.36 would give you a really nice entry, in conjunction with the 764 of the bigger range at 150.33.5, so 34 area. It's giving you two confluences, a nice fib extension, a nice push up, one final push up to grab liquid, make a new high, and then drop from here, which again, textbook using the fib extension. So if I was to drill down on a 5-minute, you could really see the way that price has gone up and made that extended move, which again, if you were bullish and long with the trend, because the trend, to be fair, is bullish, so today's bias is bullish bias, then you could buy up to at least retest the high, and then if it goes up here, this is where you'd likely cash out and take some profit, because as you can see on the smaller time frames, we just don't have the volume. The volume is not there. There is clear divergence. When you get a trend line and you put it on here, you can clearly see that it is struggling big time, and you can see the way it's just gone and dropped below the zero line. At the same time, we've made this false breakout to the upside, and so that would be the end of the move. So if you were long, great, there's money to be made to the upside. Using divergence, this is your first confluence to help you enter, to look for an entry. Using the smaller time frames, even evident on the 15-minute, you can see there is slight divergence. The volume just hasn't been able to go above the previous bit of volume that we had. So this is two-wave divergence. This is what you call it when you get these waves. So 2 waves good, 3 waves even stronger, 4 waves stronger still. You can always see using volume, which you often see this sort of volume indicator on the side of your charts. On the actual chart, some people use a volume profiling sort of indicator to help. I tend to have mine off my chart because I tend to put a lot of stuff on my chart as it is, and it gets too congested, so I have it down here. And this is called the awesome oscillator, and it just works an absolute treat. It's powerful, and I apply it. It's integral to, well, it's essential to a lot of my strategies and to my trading as well. It's a fantastic volume indicator. So you can clearly see here, entries around 150.34. Stop loss only then needed to be at the last high, which is around 38. So even if you rounded it up to 40, you're looking at around 6 pips. I mean, for a 6 pip stop loss, and looking ideally for a decent 30-40 pip move. Again, the risk to reward was fantastic. Stops are now been brought to break even. Now the reason I do that's the next step, is because we have actually given back 76.4 of this move. So if I plot the fibs again, using my fib tool as my primary confluence, go here, you see the break, you see the push down to about 150.08. This is where I just instructed, that's where I would take some profit. I did just share that in my analysis and signals channel on the Telegram as well. and you can understand why, because I've got my 764 there. And also, why am I saying that? I mean, if my target is down here, well, if the trend was a downtrend and we were on a daily high time frames in a downtrend, then this would simply be a pullback up, and it would easily drop with absolutely no resistance whatsoever, and the supports would just be torn and broken, and it would just melt quite simply with you know, as the path of least resistance. But when you go to a higher time frame, which is why we always talk about top-down analysis, so always look at what's going on a bigger picture, and you've got this bullish surge to the upside. So today, at least, the bullish price action and bullish bias is very much relevant and really obvious. So you are in fact going against the grain. So expecting it just to simply drop and fall down with absolutely no resistance is a naive way to trade. And so this is why we look at the high time frames and we say, okay, we've had the first retracement up to this key area. If we do want to take any counter trend trade back down, then clearly this is going to be the area that we will do it. And clearly you can see how price has reacted there and done exactly what we wanted. Again, the argument could be that we are making lower highs and we are still very much in a downtrend. So if it fails here and does turn over, then perhaps into tomorrow at least, if it doesn't take out all of this previous structure here, then we would expect to see a big sharp sell-off. It might not happen until tomorrow, but certainly for now, because on the high time frame, so the daily, it's bullish bias. So any corrective pullback could just be a corrective pullback. It might not have the stamina and the sellers, you know, basically common sense saying there's not enough sellers in the market to just drive price down to here and to here. Of course, that can all change. So that's why we always say that as part of our plan, and you know, when we look at having a trade plan with maybe 5 or 6 key points, one of those key points is I think, so I did share trading rules for new traders, and point 3 was act immediately without hesitation on qualified setup. So the strategies are there, it's all telling us exactly where to get in. That's a qualified setup. So act immediately without hesitation, which means you get the best possible entry up here. You can move your stop to break even, you can even take some nice profit off, and it's all stress free, and you know, price did exactly what you wanted it to do. And so if we drill down to a 5-minute chart again, you see even here we had a confirmation pullback, which is fantastic pullback right here. We had the initial drop, then we had a 764 pullback up to about 30, I think it was about 35, 36. So even if you missed the first entry and you didn't get the right entry, it gave you a second opportunity. And this is where Elliott wave comes into play, because we have an Elliott wave theory in terms of price action. Now this can happen on any time frame, any range, it's irrelevant, but you will always see what we call maybe a mini Elliott wave bit of price action, which is to say that we get the first wave down, wave 1, then we see a wave 2 pullback to a 764. That's our wave 2, and that is our entry. That's where we execute short for a wave 3. Now the wave 3 is generally the biggest wave, so we're looking for a 161 extension, a nice big push to the downside. So how do we do that? Right, we get our fibs again and we go, where's the wave 1 move to the wave 2 pullback? Okay, so always when you're plotting your fibs, always from left to right. Doesn't matter in this case, we're going from down here to up here. And what does it give us? It gives us a 161 extension down at around 150.06. So a nice bit of support down there. Also, I've got the 764 of the last range down around there. So this is what I've just said to all my traders that have taken this trade short on a pound yen, that they would look to take some profit. It would be sensible to take some profit down around 150.06 to 08, because this is where I'm finding this nice area of support which is relevant to me. Even if you didn't take some profit or you just took a little bit off, moving stops to break even, if you've got it up here, decent entry, or at least moving stops to that last pullback and where the 764 is. And again, if we're looking at the bigger picture and we're saying that 764 is at 150.34, you've got resistance, multiple confluences all stacking up perfectly to say that's where your stop should be, that's where your entry should be. In an ideal scenario, that's a risk-free trade now, and you've even gone so far as to make some easy, very quick, painless, easy money where you just had literally an hour's worth of movement, gave you perfect price action, and hopefully that will give you a clear insight as to how I view the charts every day on these setups, how I qualify setup, how I apply my 764 strategy in this case, and then how we also use other parts of my strategy, so like divergence, to look for failure and for it to come back down, and it's all written, it's all charted, it's all live examples, case studies, all there in my Discord. I'm sharing stuff like this in my signals analysis group every single day. All you have to do is spend 10 minutes watching this video and be bothered, be bothered to immerse yourself and pick up some tips and pointers, and hopefully it will help improve your trading. Okay, so have a great day, and we'll catch up again maybe tomorrow, because I'm pretty much done for today.